Alright, looking at the E-mini 500s here, futures. Right now we've got a fib drawn from the 1230 extension low up here into the all-time highs with the rollover. All-time high is 2401, so we'll see that back on the 90-day when we check into it. And we also have this channel drawn that we were in from all-time high into about the end of March. We broke out here in April, and we've been riding the outside of this channel line. We'll talk about that a little bit more as well. Today you can see that price came into the 161.8 of this previous channel, and there was a hard rejection there at price. You can see a little bit clearer on the 5-minute. We test it once, we fall off, we test back into it again, we can't break any higher on the double top. Fed minutes come out here, and then market fails all the way through it. So certainly something to pay attention to. If we want to, we can take it out into a 90-day. Let's go 90-day 2-hour. Okay, and so we can see that if we draw a fib from the all-time high rate 2401 down here into this trough low, the 61.8 here resides at this 2269 area. You can see that we've tested it a couple times with failure. I've talked about it throughout the weeks, and today again you can see that we ran up, we tested that 161.8 out of channel. The horizontal 61.8 of the secondary failed to hold at 2369, and price explored lower to back test once again this channel breakout. If we want, we can go ahead and draw a tertiary on here. And you can see the 61.8 from the low we set right against that primary 50 up into that bounce high at 161.8, the channel. The 61.8 of that tertiary move is down here at about 2339, 2340. We have already tested that price, but it hasn't been since we set this range. So technically it wasn't a 61.8 when we tested. So what we're going to want to watch here is, do we get support? You can actually see price is actually starting to fall back into this channel. But what we want to see here is we want to see price bounce off this 2339 half or so. Ultimately, what would be best for price would be if it just rode this previous channel all the way down into price and then it bounced higher. The 61.8 should be demand for futures, and since the top of this channel that was once supply, since it's broke out, it has turned into demand. So basically we're going to have demand and demand about the same price juncture here. It looks like right about midnight on the 7th or so. So it'll be interesting to see what price does there. Obviously we can meander our way through there a little bit quicker or come down and touch. It doesn't have to be perfect, but somewhere in this general range, like a 4 or 5 point range, it'd be nice to see this tested, and then a recovery bounce. If there is a recovery bounce, you could always draw a Fibonacci level into wherever this low is from that previous high. If it does touch perfectly here, you can see that 61.8 on the 4th term is up there at about 2361 half or so. So that is also the beginning of that breakdown level of the retest. So that'll certainly be something to watch once we do come down here into this 2339 or so. But for now, let's remove this 4th term and let's just go back out to a 6-month. So what happens if price doesn't bounce this tertiary 61.8? Well, we can see from the 6-month that all the volume has been built into range. It extends from about 2340 up into about 2380 or so. Nice clustering of volume. So let's assume that this 61.8 fails. And here, this is what we're left with. So what happens if price breaks down into this channel, or price just keeps sliding? Well, we have tested the 38.2 of this primary from the extension that we started with. You can see a liquidation break and then a responsive buying off of that price to test up here into the secondary 38 or 31.8 or 61.8. And now the question is, do we test back down here into the 50? Do we do a solid test down here into 23.8 or 23.13 and then bounce off price? Or do we test lower into this primary 61.8 down here at 22.92 or so? Just to remind folks that there is quite a bit of a volume null in this general area from 23.33 down all the way down into about 22.92, with the 6-month POC sitting all the way down here at 22.60. So about another 80-point move just to get down to the POC on the 6-month. I'm not saying that that's gonna be what happens, but it's certainly something to watch for. We could also do something like this. Let's just edit some of these properties out. And we'll make it orange just so we can see it. And let's do a little zoom. So what we've done is we've drawn a Fibonacci level from this bounce low from the excess up here into where we rejected today at the 161.8 of the channel. And you can see that that puts the 161.8 of that move down here at 22.82. And again, that's right below that 61.8 and right back into that volume supply. So certainly an interesting target to watch for. I'm not saying it's 100%, but it certainly warrants the possibility. You can also see that even if it broke all the way down in here, we still wouldn't be at channel low yet. Might be a little bit clearer on the 90-day. There you go. So even if we broke down here into 22.92, technically we could break down and this crosses tomorrow at open down here at 22.92. So channel low and the 61.8 would certainly be a very viable point in my opinion. You might see that wick low down here into the 161.8 and then the push back higher over the 22.92 to close, and then that run up to back test this level. It all just depends on how this market reacts from here. But these are certainly the price points that I would be watching. Hard to get overly bullish if we can't hold over that secondary 61.8 up here at 23.70. To the upside, you can also note that the 161.8 of that channel crosses this secondary 61.8. Looks like April 7th or so. So if price were to bounce off of this, it would certainly give more of a cause to come up and test this price in this general area. Oftentimes when there's a confluence of points like that, it's a lot easier to get through them at the times where they're crossing than to do them separately. As we saw today, we were able to break over the 61.8, the secondary, easily, but then when that channel test came in, we rejected it pretty hard. Until we can find demand for price, we should just continue to explore lower. The question is just how much lower, and these will be my reference points to watch. Obviously, if you wanted, you could put the rest of these price points back on the tertiary. You can see we've already broke the 50 and coming down into the 61.8. So the question really, do we double bottom off this tertiary 61.8 and bounce higher, or do we see that failure back down to test down into the 2300, like the lower 2300 range?